What's up? What's up? What's up? My mind, your money, business people. I pray all is well. The stock market has just closed, the US stock market, and it looks like things went pretty good, right? So I'm trying to log into my account and I can't. So let's just get into the article, shall we? I will have to figure this out later. Oh, I can go here. I just wanted to check my account to see what changes were made today, right? Because, ooh, I did pretty good, people. I actually made some money today. So I hope you're in the stock market and not just on the sidelines, thinking about investing into the stock market because no time is the best time to invest. You need to take the risk because investing is a risk, but it has to be a calculated risk. And it can be calculated by just simply doing your research. Do your research and make a decision on whether or not to invest in to the stock market. So, as this title says, the stock market review. It says here, the S&P 500 clinches fresh record amid GDP data, chip stock gains. There's some data that came out today, and it looks like the data that came out today boosted the stock market. So the article goes on to say the U.S. stocks jumped Thursday as the S&P 500 closed at a record high. Investors welcomed a slew of updates, including solid U.S. economic data and Micron's upbeat earnings and China pledges of more stimulus because, as reported yesterday, China was in some trouble, right, with their stock market. And it just goes to show how other countries can affect our stock market and vice versa. Our market affects other countries as well. The Dow Jones Industrial Average rose 0.62%, while the S&P 500 added more 0.4% to close at a record high of 5,745.39 points. This is the highest the stock market has ever been in history. And I was going to talk about it today, but instead, as you can see by the title, I'm going to give the review of the stock market today, and then also talk about Nvidia, the road to 200. Because currently the stock is trading at, what is the stock trading at? Nvidia closed today at $124.04. And I believe the stock is underpriced, undervalued. That's just my opinion. Now, for everyone out there, I'm not a financial advisor. I'm not a professional. I'm just someone on YouTube providing their opinion on the things that I am investing in and on the stock market. I'm also learning more and more every day that I read these articles, that I do my due diligence and research. And so far in the last 4 years, I have not established, but I have experienced. I don't even know if that's the right word. Either way, I've made a lot of money. I made a lot of money the last 4 years. Okay, it says the tech-heavy NASDAQ composite gained 0.6% amid a sharp spike in Micron shares, which boosted other chips. A final update from the U.S. government on a second quarter GDP growth beat Wall Street expectations, while weekly jobless claims unexpectedly fell to the lowest levels in 4 months. The key, so for me, I've started to recognize key buzzwords in a lot of these articles. It says, a final update from the U.S. government on second quarter GDP growth beat Wall Street expectations. And just know that on Wall Street, that is where a lot of the major investors are located. The big, investment gurus, hedge fund managers. So now when I read articles about things not meeting investors' expectations, it's not necessarily me. because I don't have that much skin in the game. I have some skin in the game, but not enough skin to move the price of a stock down like these big time investors on Wall Street. So just remember that. They can control a lot. They can tank a stock if they want to. They can drive the price up if they want to. It's all about what mood they're in. But I think, like what I'm going to read about Nvidia, that is something that cannot be stopped by anyone. Okay. Meanwhile, China's top leaders signaled they are pulling out the stops to revive its economy with new pledges to lift fiscal spending, halt the property crisis, and support the stock market. A big jump in mainland stocks set the CSI 300 on track for its best week in a decade. Up next Friday will bring a highly anticipated reading on the Persona Consumption Expenditures Index. Again, I'm going to be paying attention to this report that's coming out next Friday because it affects the stock market. If it's a good report, stocks are more than likely going to go up like they did today because the reports that came out today were good. If it's bad, things go down. Okay, the inflation metrics preferred by the Fed. So the Persona Consumption Expenditures Index is a metric preferred by the Fed. Okay, in individual stock moves, Super Microcomputer SMCI tanked 12% after the Wall Street Journal reported the Department of Justice is probing the server marker following a short seller report from Hindenburg Research published last month. That's interesting. And that's pretty much it for the stock market report for today. So let's talk about Nvidia. Nvidia's road to 200. And like I just stated earlier, the stock is currently at $124.04. But the article is talking about the road to $200. $200. Could Nvidia stock reach 200 in the next 2 years? Now, this article I am reading from Forbes, and it says, we think there is a possibility. How? Consider this, the article says. Just about 9 months ago, at the end of December 2023, Nvidia's stock was trading around $50 levels. So the stock was being sold at $50 levels in December of 2023. What is it being sold at now? 124. This year, the stock has grown over 2x since the trades at close to $116 presently. But this article, even though it has today's date on it, that $116 level is obviously old because, well, today it closed at 124. So that's even better. Okay, looking at valuations, Nvidia stock trades at about 95x trailing earnings. Is this pricey? Not really, especially if you consider the company's steadily expanding earnings, the long growth runway for the artificial intelligence market, and Nvidia formidable lead in the accelerated computing market. Like Nvidia is leading this AI market above everyone else. They're talking about Nvidia, taking at least 80% of the money that's being invested in AI technology right now. And all the companies out there, the big time companies like the Amazon, Microsoft, Meta, they're investing billions and billions and billions of dollars into this accelerated computing. Why? Because it moves at a faster rate, or it operates at a faster rate, and it saves even more data. Like the internet and things are changing. It's changing, moving forward in the future. For a long time, I used to hear people talk about this big wealth transfer that's happening or that's about to happen. And I now see what they're talking about. There's a lot of money being invested into companies and into the stock market, and even more to come because things are changing. And if you're not creating one of these companies, if you're not a part of or the creative or part of any of these companies, boards, if you're not investing into the stock market, you're going to miss out on a lot of money that's being invested and exchanging hands, right? So it says here, the Fed's recent rate cut could also provide a boost as investors seek growth opportunities in low rate environment. Again, when rates are lower, people spend more money, people invest more money into their companies, into the stock market, because when the rates are low, prices are going to go high. So if rates are low and prices are going to go high, it's best that you start investing now, because that means the prices of certain stocks, good growth stocks, are going to go up at some point. And they're going up slowly but surely. And that's why tomorrow I will probably talk about the month of September, because this month is quite different compared to, let's say, the last 4 years, September, right? It says, in the scenario below, we use NVIDIA's revenues, profitability, and valuation multiples to demonstrate a potential path to a $200 stock price. And also, I wanted to say, NVIDIA has now reached, they're now back to its $3 trillion, it's over $3 trillion evaluation. Yes, NVIDIA's market cap is now 3 trillion. I think I said 3 million. I meant 3 trillion, 3 trillion, 400, no, 3 trillion, 43 billion dollar evaluation. Before it had dropped, and now is back over $3 trillion. And the company is going to make even more money because it's because of the new chip that is bringing out. There are companies that have invested billions in pre-orders into this chip that Nvidia is creating. Okay. The article goes on to say, rate cuts, a shift toward multimodal models will drive revenue. Nvidia's revenues grew close to 3x over the last 12 months, while notching an average annual growth rate of about 55% over the last 3 years. Can you believe that? What if you had been investing into this company? You would have made 55% returns on your money for the last 3 years, and the momentum can hold up. If Nvidia grows its sales at an average annual rate of over 60% for the next 2 years, its revenues could move from around 61 billion, because that's what it's at right now, in fiscal year 24, to around 155 billion by fiscal year 2026, or over 2.5x. I believe that to be true because, again, NVIDIA controls about 80% of the AI market. They're leading technology. They have chips that are coming out next year. They're way ahead of everyone else. There's no one close to NVIDIA. Okay, there are several trends that could drive continued growth. While the initial AI models deployed by the likes of OpenAI in 2022 were largely text-based models, are increasingly multimodal, working with speech, images, video, and 3D calling for higher computing power. That's where NVIDIA steps in, and a larger number of GP shipments. That's NVIDIA. Moreover, unlike a decade or so ago, when advancements in computer power, particularly with processors, outpaced the development software that could fully utilize these capabilities. In the AI era, the demand for computing power has skyrocketed. The internet's going to change. Computing powers, what NVIDIA is able to do is a game changer for most of these companies. And that's why Meta, Microsoft, all these big time companies, Apple, they're investing billions and billions of dollars into their companies by purchasing AI, these semiconductor chips from NVIDIA to advance its computing power, to be able to process data at a faster rate in order to store data. They're like building these huge data centers, right? And for most of you that aren't aware of what NVIDIA does, go to its website. It tells you everyone that they are partnered with, everything that they're doing. Do your research, people, right? And then you will understand what I'm talking about. Okay, like I said, the demand for computing power has skyrocketed due to the intense computation requirements of machine learning modules. This trend could result in sustained strong demand for Nvidia. They're leading the market. Moreover, last week's monetary easing by the Federal Reserve could provide an additional boost to Nvidia. The Fed 0.5% rate cut last Wednesday marked the first interest rate cut in close to 4 years. That's what's different about this month of September, the September effect. This month is unlike any other. So what's going to happen to the stock market? And plus the election's coming up, so who knows? But this month is definitely different this year compared to the last 4 years, like the article says. And this article is on Forbes website, written by the professionals. And me, as a consumer, as an investor, just a regular investor, um, I'm reading it. Check out our analysis of other ways to profit from the Fed's next move. Okay, with the benchmark Federal Reserve's rate standing at 4.75% to 5% post the cut, there remains room for the central bank to lower interest rates further. They're meeting again in November and again in December, and they may possibly cut rates again. And again, when rates go down, prices of things start to go up. So stocks are more than likely, good stocks, good growth stocks, are more than likely to go up. Lower rates are typically beneficial for growth sectors, including technology. This is my first time reading this article, and exactly what I was saying is what I just read. Lower rates are typically beneficial for growth sectors, including technology, which have a higher earning potential in outer years, as lower discount rates boost the present value of future earnings. The lower rates are particularly beneficial to Nvidia. Why? Lower interest rates would reduce financial costs for builders of large data centers. That's what these companies need, potentially driving up capital spending in the space and helping players like Nvidia, which sell GPUs for servers. Now, companies have, most companies borrow money to invest into their business. And what this article just said is the lower interest rates will reduce the financial costs for builders of these companies who will borrow money from the bank in order to purchase these chips. These chips are not expensive, are not cheap. So again, it's like a lot of people say, why use my money when I can use someone else's money? So why use the company's money? They go out, they provide the bank with a business plan to borrow money to invest into the company with this expected growth and earnings in the future that says you will get your money back from this loan, but hey, I need it to invest into my company. Okay, a drop in interest rates could improve the financial feasibility of these investments. Nvidia microchips and these chips that will allow accelerated computing is going to be financially feasible for these companies. It's going to help these companies grow. Okay, it says now the stock markets are often myopic and tend to extra, extrapolate, extrapolate, ext, extrapolate short-term trends for the long run. In Nvidia's case, the assumption in that demand growth and pricing power will hold up and profits will remain sizable as the generative AI wave advances. AI is not going anywhere. They're saying AI, this new technology, is the fourth industrial revolution that's taking place. And a lot of you are not aware of it. You're not investing in it, and you're about to miss out on huge gains in the coming future. Okay, however, there are multiple risks, and there remains a real possibility that the stock could see a sizable correction. Yeah. Indeed, we believe this broad range of upside and downside potential represents a simple fact. Nvidia is a volatile stock. It is. Um, it says Nvidia has already done it in the past. To put things in perspective, Nvidia stock swelled over 800% from levels of $1,300. I mean, not 1,300, but $13 in early January 2021 to around $130 now. It's at $124 versus an increase in about 50% for the S&P over this roughly 4-year period. 50% gains over the last 4 years, people. It was a bumpy ride with returns from the stock being 125% in 2021, negative 50% in 2022, 239% in 2023. And I think currently, right now, let me see, Nvidia, I believe, is over 100. It's at 150% return year to date. So yeah, it has been kind of volatile. 121% in 2021. It took a hit in 2022, negative 50%. Then it bounced back in 2023, gaining 139%. And year to date is currently at 150% return on your money. And I have some stock in Nvidia, and I've made some money. Okay, the underperformance in Nvidia stock versus the S&P 500 in 2022 stands out in particular as the benchmark index had returns of negative 19% that year. That happens. Notably, um, the Trefis high quality portfolio with a collection of 30 stocks has outperformed the S&P 500 each year over the same period. Why is that? As a group, HQ portfolio stocks provided better returns with less risk versus the benchmark index. Okay. Yeah. It's not much more to read, but I have to stop. Again, you can look up the article on Forbes and read it. It says Nvidia stock the road to 200. Yeah. So don't miss out on this ride, people. Um, Everything is a risk. Walking outside is a risk. Driving your car is a risk. Going to work is a risk. Uh, but the key thing is we spend a lot of time, say at our job, and we're working. We work hard for the money that we're making. But why do you as a person work hard for your money and then you put that money that you work hard for in the bank and you just let it sit there? So I would say look at it this way. While you're working hard, you should also make your money work for you as well. And how can you make your money work for you? I'm glad you asked. By investing into good growth stocks in stocks like Nvidia. Now, I do not suggest or recommend that you invest all of your money into a single stock like Nvidia. You can invest some money if you can afford to do so in Nvidia, and you can also invest into good growth mutual funds, index funds, exchange traded funds like the S&P 500, which on average has provided over 10% returns over the last 100 years. And right now, year to date, what has the S&P 500 done? Let's see. Year to date, the S&P 500 has brought back over 20%. How much money are you getting from your bank? How much money are you getting from your bank? You're not getting 20%. You're not getting 10%. You're not getting 5%. You may be getting 5% if you were able to tap into a high yield savings account. But then some of those accounts lock your money up for like 1 year, 5 years. It's guaranteed that way. But in the stock market, you're gaining 20%, 10%, 15%. Nvidia, 150%. Let's go to information technology fund that consists of 296 companies. The year-to-date returns for this company is over 20%. as well. And those exchange traded funds or index funds or mutual funds, even though they consist of, hundreds of different other companies. BTSAX, which comprises of stocks that cover the total stock market. The year-to-date return for that is over 18%, almost 19%. You can get that from Vanguard. So yeah, investing is important, people. Doing your research is important, people. No one's going to make you money or create a foundation for your life financially or the ability to pass on generational wealth like you. No one's going to do it for you. You have to do it for yourself. Do it for yourself, people. All right. All right. So I'm going to end this video now. Hope you guys have a blessed day. Peace. Invest your money. Oh, and if you, again, this is me giving my opinion on the stock market. I'm not a stock market investor. I mean, I am an investor, but I'm not a financial planner, a money manager. I only do that for my own money. But if you need advice and you're not, comfortable with investing your own money, find a financial planner, a financial investor, and have that person, him or her, invest your money on your behalf. All right. You guys take care. Peace.